Well, Australia's biggest steelmaker, BlueScope, today said underlying profit fell 51% to $420 million, as revenue fell 4% to $16.25 billion. But BlueScope's reported net profit was down 90% after its coated products business in America was written down by $439 million. The business was only acquired in 2022. The company's dividend, 60 cents a share, up by 5 cents. But the most important chart that BlueScope produced is this one. Its return on invested capital. In the past year, its return in Australia fell to 6.2%. In America, it halved to around 8.8% after those write-downs. And across Asia, it's 14.2%. The tougher outlook also weighed on BlueScope shares. You can see they were down 3.1% today after being up by 25% in the year to date. Now, earlier, I spoke with BlueScope's chief executive, Mark Vassella.
Yeah, it was disappointing, Ross, but I mean, what gives me great confidence is this is a business that we know we make money out of in the rest of our portfolio. Unfortunately, the integration's been slower than we expected. There's been some challenges with the customer base. There's been some asset issues that we've been dealing with. We've got new management in there now. And I still fundamentally believe in the medium and long term. So effectively what those assets do, Ross, is produce COLORBOND for us in North America. And I still think there's a medium and long term growth story around those assets, which they will prove to be valuable for us in that time frame.
But it's still a hit to the shareholders. What it makes me wonder is here in Australia, you've put together a syndicate to at least look at the Vassella Steelworks. Given that experience of buying a new business that didn't live up to your expectations in North America, whether coming back here, really your management team is up to taking on another very difficult project in Vassella.
It is a difficult project, Ross, and I think what you can see from the consortium that we've put together and the fact that we're very early in this process. I mean, the business was put into administration only in February or March this year. The last time the Vassella assets went into administration, they were in administration for 18 months. So there's a long time to go on this process. We've put a non-binding expression of interest in. We've been advising the administrator on the asset because we have the technical and operational expertise to do that. We're most qualified for that. So our team from Port Kembla have been working with the administrators. We know the assets well, but from our perspective, this is just the start of a longer-term potential around the steelmaking assets, but also around that valuable iron ore reserve that's there. And the consortium is really a recognition that this is bigger than something that BlueScope could take on their own. So 3 very credible global steelmakers who also have an interest in the iron ore reserve, and something that we'll work through over the next year or so, I suspect will take to get to a point where there'd be any investment decision that would be required.
But there's also a bit of truth there, is that steelworks, plus also that iron ore mine right now, is only surviving due to the financial grace of the South Australian and federal governments. My thought would be, even going forward, it would almost be impossible to build a business case for the Vassella Steelworks in future without significant government support.
Well, that's the work we've got to do. And as we go through the assessment of where the existing business is, what the potential is for the iron ore reserve, perhaps to have an iron production facility that could be used in Port Kembla and with the other consortium partners, and any surplus material then exported. That's the work that we have to go through. That's the feasibility process that would be part of the second phase of the administration process that we're going into, to actually test up and determine whether there is a model that we can create value out of. And we've been really clear that unless that model or that plan meets the investment hurdles of BlueScope and the other consortium partners, then there's no obligation or no commitment that we would necessarily make.
Yeah, and that'd be the key, the investment hurdles that you've got. I just want to go to that because obviously you're the chief executive of what is one of Australia's largest industrial organisations. You have to compete here in Australia. So this whole productivity roundtable that we've got this week, you've had to go down this productivity front to basically ensure your business's survival and the jobs of those people that work for BlueScope. That's a pretty tough ask, isn't it? Is there more government really could do to help this productivity sort of, if you like, equation change for Australia?
Yeah, I'm part of the steel industry and I love it, obviously, but part of the steel industry is that continuous improvement. I mean, the people that work at BlueScope and in our businesses get out of bed every day and think about how they can do things faster, better, cheaper than they did yesterday. And that's what keeps a company like ours afloat and profitable and viable, often in the face of often in the face of costs and other impediments that are not of our own doing. So that's very much the DNA of the organisation. The Productivity Roundtable, we think, is a really important time for Australia. We've got the current government in for its second term, perhaps even more than 2 terms. I'm actually of the view that we're potentially in a space where there is momentum building for change. People are sick to death of energy costs and its impact not only on business but also on households. So I think there's potentially a convergence of events here, Ross, where maybe there can be some change driven. But if I think about productivity, I mean, the big issues for us, clearly energy costs, and we've made a submission to the federal government's gas review on the East Coast gas market. Regulation, red tape, housing, another really important area for us as a manufacturer. If we could free up planning processes and stimulate housing in this country, that's great from a BlueScope perspective and our fabulous ColourBond product.
Yeah, just one final one. Because you have an easy comparison between Australia and the United States, your return on your capital at Blue Star in the United States versus your Australian assets, how different are they?
They're very different, and that's part of the challenge we have. Now, what we've done in Australia is work very hard on selling much more of the premium products like ColourBond and TrueCore, which give us a better return than the more commoditised product which we sell out of the North Star assets in North America. But as we've called out this morning in the results and as part of the gas submission we've made to the federal government, right now energy costs in Australia are 3 to 4 times more expensive than they are in North America. What you're seeing in North America with that massive amount of reinvestment on the back of the administration's approach to tariffs and the attractive nature of that market, the scale of that market, also with competitive energy, that's what drives investment and where the capital dollar flows. So that is a hurdle and a burden in Australia, which is why we've gone a bit on the front foot today around energy costs. We need to drive change in energy costs in Australia.
Because just one final aspect of this, and that is that politics and politicians sometimes move glacially slowly, but capital that you have and other businesses have can move and leave this country very, very rapidly. That, I think, is something that politicians sometimes miss.
Yeah, that's a concern, Ross. And again, when you're a small market like Australia, unlike the US, when manufacturing capacity goes, it's very unlikely that it would ever return. We saw that with the automotive industry. What you're now seeing in the US on the back of the current administration's tariff position is we have companies from all over the world investing in the US because it is competitive, but also because it's a very large market. So you have the benefit of scale. So that is a real watch out for Australia. If we lose manufacturing capacity here, it won't come back.
Mark Vassella, always good to chat to you. Many thanks for your time today.
Thanks, Ross.